Will Bitcoin experience a sharp drop? If you're interested in knowing more about this, please keep watching. Currently, BitGet is offering a promotion where you can receive $10 in trial funds after registering an account without deposit or KYC. You just need to register. No KYC or deposit is required, so it's definitely worth checking out. As for Bybit's promotion, it has already ended. Also, feel free to join my Discord community, where we discuss market trends, and you can connect with other skilled traders. Welcome! We have good stuff waiting for you. Now, let's take a look at Bitcoin's market performance. In the past few months, Bitcoin has been dropping since breaking the pattern, and it has already touched an important support level of around 27,000 to 26,800 US dollars. Well, why is this level important? First, it's a support level, an effective support level, and it has served an S/ or reversal role. You can see that it was a support before. When the price touches this level again, will it serve as support? It will, but its effectiveness remains to be seen. Looking back at the last touch of this support level, was the support strong enough? Yes, it was. Let's find out why. Upon hitting the support line, it triggered a strong rebound with huge volume, demonstrating the support strength at the 27,000 to 26,800 range. Next, actually, we have reached a boundary of a pattern, a head and shoulders pattern. To be exact, we have reached the neckline. If it breaks down with volume in the next few days, and if there is a long red candle that breaks through the neckline, I think this small bull run that we have been experiencing since November is very likely to end completely. So, everyone should be cautious, especially since we are at a critical point where it's the boundary of the pattern and an important support level. Now, let's bring up another tool, the EMA ribbon. As you can see, we have been in an uptrend since the market turned into a bullish alignment on the daily chart. And now, you can see, this is EMA, a weighted moving average. It's very sensitive to the market. If our candlesticks or prices are below the EMA, the trend will quickly reverse. It'll quickly reverse. Moreover, you'll notice that if the price does not recover above the EMA ribbon in the next few days, it will soon turn into a bearish formation. If so, this is not a bullish market. Therefore, we should absolutely avoid considering long positions. So, let's talk about the high and low points. How to mark them. Let's see. Let's start marking them from here. From here, as you can see, a bullish trend means higher highs and higher lows. We have a higher high here, and then a higher low, and another higher high. These are the important points. If we want to judge if the trend is still ongoing, we must look at this. If the level around 26,525 is broken, we cannot go long anymore. You'll find out that this is a very critical point where several important technical indicators overlap. If this point is broken, the consequences will be unimaginable. Let's take a look at the MACD. For MACD, it's already had a correction. To generate a divergence, we need a corrective wave. We can see that it has already appeared. The corrective wave has appeared. Now, we are waiting for a golden cross below the baseline for an opportunity to go long. Both the MACD and signal lines have already crossed below the zero axis. If a golden cross is formed below the baseline, and these lines turn upward, it will be an excellent opportunity to go long. But before this opportunity arises, we shouldn't consider it. For example, if we want to go short, we need to see a high-volume bearish candlestick breaking below the neckline. Only then can we go short. If we want to go long, we need to see a golden cross and a bullish rebound with volume at the bottom. Personally, I will only consider going long when these conditions are met. Right now, we are at a critical level. Speaking of the trading opportunities, during the previous range of consolidation, trading was not worthwhile, and trend trading in this range usually resulted in losses. But now, I believe that the trading opportunity for trend traders will emerge very soon. It will soon be time to determine the bull or bear market. Personally, I didn't short it before because the volume during the decline wasn't significant. The volume was nothing special, as it wasn't much different from the volume during the previous oscillation period. All right. Next, in the past, the formation of a top. If the price falls below 27,000, does it mean this is the market top? Because the current small bull run is about to end. I mean, if the price can't stay above 27,000. However, we will notice this within the range. Trading in this box pattern. Are many of the traders being bearish? I would say yes. But to form a top, we need to see many people being bullish, going long, having an optimistic outlook, and buying spots. That's when the price peaks. Let's take a look at an indicator. This is not a technical indicator, but rather a set of data. This is Bitcoin's funding rate for the current period. It is biased because it only calculates one period. We need to look at all periods. And for that, we can only rely on the chart. You can see that our funding rate is currently at a very low position. Very, very low. This indicates that there are many people with a bearish outlook, and the negative sentiment is strong. However, judging from the past performance, we can see that when the price is forming a short-term top, we will definitely see many people crazily buying, going long, and being bullish for a period of time. Why? Let's look at this. This indicator is free and public. We can see that this is the funding rate on the BitMEX exchange. Why BitMEX? Because it used to dominate the market. Well, you can imagine it as being twice as big as Binance and dominating the derivatives market with a market share of over 60%, which is more than half. That's much more exaggerated than Binance is now. When the price was creating a top before, the funding rate was extremely exaggerated. But now, do we see this situation? No. Instead, it's negative. So, I think it's difficult for the price to form the structure of a market top here because there aren't enough people who are bullish enough. As you can see later, before the crash, at least we were maintaining around the base fee rate, and there wasn't too much bearish sentiment. Let's imagine if there are many people having a negative outlook on the market at the top. Will this bearish sentiment really take hold? Also, before March 12th, you can see. Let's move to March 12th. Okay, that day was very scary. But if we look at the price movement before the crash, on March 12th, this section, everyone was bullish during the halving event, thinking that the price would skyrocket next. However, you can see that when our funding rate is very high, and everyone is very bullish, their expectation will be disappointed, followed by a sharp drop. We'll see the price hitting a short-term peak. But now, if the price were hitting a short-term peak, we should have seen everyone crazily buying, going long, buying spots, and having an optimistic outlook. Have we seen this behavior? From the current data, it seems not. So we need to be cautious and pay attention. At least there are no short positions. Right now, the position was closed with profit before this. For the spots, yeah, almost. So now we have to wait and see what happens in the range between 27,000 and 26,800. If the price breaks through this range, it is very likely that this bullish trend will end. But if the price stays above this level, it is very likely that this will be the starting point for our next bullish trend. It will truly be a bullish trend. Therefore, at this level, it is a good time to enter the market. My next trade will likely open in the next few days and will be based on the market. All right, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.